The average US tax refund in 2024 was $3,167. And guess what? Your refund could be way bigger. But here's the truth. Most founders, freelancers, and small businesses don't realize they either leave money on the table or worse, end up overpaying because they don't know how much of the tax code is designed to reward them. Whether your income shifted, you launched a new business, or you worked a patchwork of gigs and clients, your 2025 refund potential has everything to do with what you claim and how you file. Today, I'm walking you through 6 important steps you need to take to get the biggest tax refund in 2025. We'll cover how to know if you qualify for a refund, deductions and credits you actually qualify for, the best timing and filing tactics, common refund-killing mistakes, and how to optimize it all stress-free. Let's unlock that bigger refund today. Step 1. Confirm you're eligible for a refund. Too often, founders and freelancers and gig workers skip filing or rush through it without realizing that they're actually owed money back. Whether you're running a business or juggling multiple income streams, the key to unlocking a refund starts with understanding your eligibility. Let's take this quick quiz to find out if you're eligible for a refund this year. Did you have federal income tax withheld from a paycheck? If you worked a W-2 job at any point and didn't adjust your withholdings after a raise, bonus, or side hustle income, chances are you overpaid, especially if your employer used default withholding settings. Did you make quarterly estimated tax payments as a self-employed person? Freelancers and solopreneurs often overestimate their quarterly taxes to avoid underpayment penalties. If your actual net income was lower than expected, you might be entitled to a refund on the difference. Did you qualify for any refundable tax credits? Unlike non-refundable credits, which just reduce your tax bill, refundable credits can increase your refund even if you owe $0 in taxes. These include the Earned Income Tax Credit or Child Tax Credit. You could qualify for a refund even with low or negative taxable income. Did your business operate at a loss? Founders who invested heavily in their business during the year but didn't turn a profit can often carry losses forward or offset other income. If taxes were prepaid, if you estimated payments or payroll, you may be entitled to some of that money back. If you checked any of these boxes, you're potentially leaving money on the table. Step 2, pick the right filing status and update it if needed. Your filing status is a major factor that influences how much tax you owe, which credits you qualify for, and ultimately how big your refund could be. Choosing the wrong filing status or forgetting to update it after life changes can cost you thousands, but once selected strategically, it can unlock credits, boost deductions, and shrink your taxable income. Here are 4 common filing statuses and why they matter. Number 1, single. Default for unmarried individuals with no dependents. 2025 standard deduction projected, $14.6K. This is best for unmarried individuals with no dependents. Number 2, married, filing jointly. Married couples filing together. 2025 standard deduction projected, $29.2K. Access to higher income, phased out limits for child tax credit, earned income tax credit, and IRA contributions. Best for couples where one spouse earns significantly more or both want broader tax benefits. Number 3 is head of household for unmarried taxpayers supporting dependents. The 2025 standard deduction projected is $29.9K. This is best for single parents or caregivers who pay more than half of household expenses. Number 4 is qualifying widower. For up to 2 years after a spouse passes away, you get the same benefits as married filing jointly, best for recently widowed individuals with children. And finally, consider entity status too if it applies to you. S-corps aren't technically a filing status, but how you elect to structure your business. LLC versus S-corp has a direct effect on your personal tax return. If you're thinking of switching to an S-corp in 2025, it might lower your overall taxes and increase your refund, especially if you're earning more than $80,000 per year as a solo founder. With the right CPA guidance, you can file with the right status and the right structure, maximizing your refund from both ends. Step 3, maximize your deductions with these strategies. Every dollar you deduct reduces your taxable income, and that directly impacts how much you owe or how much you get back. Think of deductions as strategic levers. The more legitimate expenses you track and claim, the higher your potential refund. For freelancers and 1099 workers, you're essentially running a business, so every tool, trip, or gig-related expense can count. Here's how to make every dollar work for you. Home office expenses. You can claim a portion of your rent, utilities, and maintenance costs. Software and tools. All those subscriptions to Zoom, Canva, Notion, Slack, Grammarly, and similar tools are deductible. Phone and internet. Allocate the percentage you use for business. For example, if you use 70% of your $100 monthly phone bill for business, that's $840 per year in deductions. Business mileage. The 2025 IRS rate is to be determined, but 2024 was 67 cents per mile. If you drive 5,000 miles per work, that's potentially $3,350 in deductions. Pro tip, use mileage tracking apps like Everlance or MileIQ to auto-log trips and stay audit ready. For startup founders, starting up means spending upfront, and if you're tracking these costs right, the IRS lets you deduct up to $5,000 in your first year. This phases out if startup expenses exceed $50,000. Startup costs include legal fees, incorporation costs, branding, and early advertising spend. You can deduct up to $5,000 in the first year, with the rest amortized over 15 years. Business meals and travel. Meals are 50% deductible, plus flights and hotel stays for business development. Keep detailed receipts. $3,000 in travel equals $1,500 in deductions. Professional services. Fees paid to CPAs, attorneys, and legal advisors are fully deductible, and especially important if you're prepping for funding or IRS filings. For W-2 employees with side hustles, even if you work a full-time job, the IRS sees your freelance gigs as a separate business. That means you're eligible for 1099 deductions too. For example, a full-time designer freelancing on Upwork can deduct their laptop plus Adobe Creative Cloud. A 9-to-5 teacher tutoring via Zoom at night can deduct home internet plus Zoom Pro. A marketer selling Etsy art prints can deduct shipping materials plus Canva Pro. Remember, even if your side hustle didn't make much, those deductions still lower your total income, which can boost your refund or reduce tax owed. Step 4, claim all refund boosting credits. While deductions reduce your taxable income, credits reduce your actual tax bill dollar for dollar. And here's the thing, some are refundable, meaning even if you owe $0 in taxes, you still get the full value back as a refund. Credits are refund game changers. The earned income tax credit can be worth up to $7,430 and is fully refundable for low to moderate income workers. The child tax credit gives up to $2,000 per child and is partially refundable for parents with dependents. The American Opportunity Credit provides up to $2,500 and is partially refundable for undergraduate students. The Lifetime Learning Credit offers up to $2,000 but is not refundable for part-time learners and graduate students. The Savers Credit gives up to $1,000 for single filers or $2,000 for joint filers, but is not refundable for low-income contributors to IRA or 401k accounts. The QBI deduction allows up to 20% of qualified business income and is not refundable for qualified pass-through entities. Remember the difference. Refundable credits can give you money back even if you owe zero taxes. Non-refundable credits can only reduce your tax bill to zero, but won't create a refund by themselves. Step 5. Time your filing and income strategically. Timing is key in maximizing your refund, unlocking credits, and keeping your tax liability in check. Tax optimization isn't just about what you report, it's also about when you report it. Here's why early filing is important. Firstly, it protects you from tax identity theft. The earlier you file, the smaller the window for fraudsters to sneak in and claim your refund. Next, you get your refund faster, especially if you e-file and opt for direct deposit. Lastly, early filing can actually help you qualify for income-based credits like the Earned Income Tax Credit or Savers Credit before your income creeps up later in the year and phases you out. So, make sure you know the IRS dates in advance and be prepared. Step 6, avoid these 5 refund-killing mistakes. Here are the top mistakes that quietly drain your refund potential and how to fix them like a pro. Mistake number 1, overlooking your 1099 income from Upwork, Strike, and other platforms. The business impact is that underreporting income can result in audits or delayed refunds. The refund-saving fix is to reconcile all 1099s with your bank statements. Mistake number 2, choosing the wrong filing status. The impact is missing out on lower tax brackets or valuable credits, especially for single parents or dependents. The fix is to consult a tax pro to confirm the best fit. Head of household status is often missed but powerful. Mistake number 3, ignoring foreign tax treaty benefits for non-residents. You might be double taxed or even miss treaty-based exclusions. The fix is to review IRS Publication 901 or lean on Doula's International CPA Network for personalized guidance. Mistake number 4 is relying entirely on AI-powered software. Software can miss nuance, especially with self-employment income, foreign filings, or complex deductions. The fix is to combine automation with human insight. At Doula, we offer both smart tools and expert human reviews. Mistake number 5, not tracking your expenses year-round. This leads to missed deductions, messy books, and a lower refund. Don't let your refund slip away, just do it. A tax refund isn't a bonus. It's your hard-earned profits, it's your money. To unlock the biggest possible refund in 2025, you need more than just software. You need a team that understands your unique setup and guides you like a partner. And with Doula, you get the perfect mix of automation, strategy, and human expertise. That is a wrap on your biggest 2025 tax refund. I hope you found value in this video. If you did, please like, subscribe, turn on notifications, and drop any questions below in the comments. Our team is here and ready to help. And if you are ready to maximize your refund, you can book a free, no strings attached demo at doula.com today. Check out the link below. Our team is more than happy to help. Thank you so much for watching. I hope you found value, and I'll see you in the next video.